Well, shares of Wynn resorts are trading in a bear market, down more than 20% from their highs after falling 26% from those April numbers. But Goldman Sachs now says it is time to get back in or just into Wynn. The firm upgrading the stock to a buy with a $155 target. That represents a 40% upside. They think the Macau worries are stabilizing and that big new Boston property should start to perform. It is your call of the day. Stephanie Link, agree?
I like it a lot.
Own it?
I really do. I do not own it, but I've been looking at it for the last couple of weeks because we are hearing that China data is getting better in terms of the GGR, which is just another form of saying gaming revenue per day is actually getting better. And that's a big piece of this story because it's 70% of their revenues, right?
Yes, but every weekend, a short ferry ride away is Hong Kong and protest demonstrations, call them what you will.
And you can say that, but the numbers have actually gotten better since the summertime. So that's one of the reasons why this analyst likes the stock. They're also buying back 12% of their cap. I mean, that's a big number too. So free cash flow generation very strong and a free cash flow yield of 9%. So I like it a lot.
I hate disagreeing with Stephanie. Usually that's the wrong position to take. But I will, because I just don't think you need to assume the risk in this being weaponized with the trade tensions. December 20th, they celebrate the anniversary of when Portugal handed Macau over to China. Concurrent with that, you've got a new government that's coming in. You're talking about the big three here, obviously. You're talking about Las Vegas Sands, MGM, and Wynn, and they're all not paying that 12% local tax. They're only paying the 39% tax. So if this becomes weaponized, you now have to factor in they're going to pay that additional 12% tax. You've also got the expiration of the operating licenses, which come about June of 2022. Who knows how long this dispute is going to last. So I agree. If there's a favorable resolution, yes, then clearly Wynn is undervalued. But I'm not smart enough to know when that resolution is going to be, so why endure the risk?
But, you know, I kind of look at stocks the way a lot like Stephanie does, and I don't own this one, but it's 27% off its all-time high. It's 17 times earnings. It's got a 3.7% dividend. Basically, I'm going to get on the plane and I'm going to go look at it. Maybe I need to buy it.
And you will like it.
Will I like it?
I think we all have the mechanism here backwards.
Yeah.
The Chinese are using Sheldon Adelson to communicate with Trump and to pull his chain back. That's what's actually happening. The Wall Street Journal had an article about it yesterday, in fact. And the only reason they would have word of this is because somebody wanted it to leak to a Journal reporter. But Sheldon Adelson had a phone call with Trump, well documented, basically saying, hey, consider the broader ramifications of this trade war with China. Now, you know, he doesn't really care. He cares about his property and the standing of U.S. gaming companies in Macau. So Joe is right to bring that up, but it's actually backwards. This is what's being used to keep Trump on an even keel. And obviously, all of this money, whether we're talking about Steve Wynn money, which may not be as relevant as it used to be, or Adelson money, that's what fuels the president. That's what fuels all of the other GOP candidates. So that is what is actually keeping the China trade war from spilling over and becoming more vicious. There are too many intertwined, interconnected interests, and the casinos arguably are at the forefront of that.
So Adelson is a significant part of the conversation. Josh is right, and he is keeping things from unraveling. The risk that you have is, heaven forbid, Adelson is not there any longer. Then you do not have that connection, and you've got that open pathway for them to respond.
Bottom line is the private sector may be keeping it from making it worse than it already is.
And to not sound cliche, it's a game I don't want to play. I think there are so many other options. And Stephanie, you probably have 15 other options in your portfolio. You did something this week.
I do.
So you didn't move on Wynn, right? You moved on some other things, and we know that.
I'm very close on Wynn, and I think the expectation.
And again, your time horizon's longer too, though. So if you assume,
I don't know about that because I don't think I want to be in this around 2022 if the discussion is going. This might just be a trade, actually.
Really?
Quite frankly, yeah. I mean, it could be like a 6-month trade.
All of those charts, are trash, though.
It's down from $202.
I was just about to say that.
They're in the middle of their range. All of these stocks are off the low, off the high.
Right.
There really is no trend.
The data is starting to improve. The data is starting to improve.
So buy the breakout.
But if we're going to go into recession, that data would roll over.
I'm buying it when the stock is low and when actually it's cheap.
But you're saying it's a trade.
That's what I do.
So it's either an investment or a trade.
It could be a 6-month trade. It could be a 12-month trade. I
can turn it into a 3-month trade for you instead.
I absolutely could. If I make money in it, I can take. This thing is very volatile, and it's like tactical almost in terms of.
Stephanie, this has the potential to be a great unusual activity trade.
There you go.